Welcome to Drill Down Earnings. We have second quarter results from Salesforce. This used to be the belle of the ball, but now they're reporting the same day as NVIDIA. But I still care. I'm Cory Johnson, Chief Market Strategist. This is the business story behind one stock on the move. Salesforce with second quarter earnings that were good, I guess. They were okay. It was better than Wall Street expected. With Wall Street got $9.33 billion in revenues, $2.56 in earnings. That's probably as far as Wall Street's going to look to understand these numbers, but we can do better. Let's look at the business story behind this stock on the move here. So within these numbers, we saw pretty steady growth, pretty decent operating margins of 19.1%. They gave us a lot of non-GAAP numbers. I don't use non-GAAP numbers because I'm just too Charlie Munger. I wanted to actually tell you what's actually happening here. They also maintained their guidance for the year, which is reassuring to investors and had the stock up a little bit. Let's dig a little bit deeper. Salesforce, of course, CRM software, and it's both a ticker and with the product, but they've got a lot of other things going on as well. And we're at a point right now where their data business is actually a big part of their business, the biggest part of their business. Productivity services also doing a lot of the heavy lifting there. But they've got some diversity in the things that they sell, and you can see that that's come on gradually as they've added more and more kinds of companies. But single-digit sales growth is not what this stock used to be made for. It used to be double digits and big double digits. Not the case anymore. And when we look at the data business, I thought that was the most interesting thing here, only because it was one business where the growth has really changed. That's the MuleSoft and Tableau businesses that they had acquired. And both of those, I guess, not doing, 13% growth is great at that kind of scale, about $1.4 billion, but a lot slower growth than they saw last quarter. Something to keep an eye on there from this business. Operating margins, just fantastic for this business, 18% after the big cuts they had. We certainly feel it here in San Francisco with fewer Salesforce employees wandering the streets of San Francisco. But nonetheless, 18% operating margins are the result of those big cutbacks. Also interesting here, when they told us about their RPOs, the contracts they've got on the books right now, customers are the long-term RPOs, those that go beyond 12 months. They grew at 20%, while the short-term RPOs grew at just 12%. So that says to me that customers are really signing long-term deals with Salesforce, which Salesforce certainly likes, and the market liked it. The stock was at 4% in after-hours trading after doing 22% in the year, which is good, but the S&P 500 did 26%. So why did the S&P 500 do so much better? There are a lot of reasons, but one is AI. And so a lot of the talk on the conference call wasn't about NVIDIA specifically or any of the big AI competitors of Salesforce. NVIDIA clearly not a competitor of Salesforce, but there are other competitors out there in the marketplace bringing AI to their customers. Marc Benioff, the CEO and founder of Salesforce, wants us to know that Salesforce is an AI company, and he's talking about it incessantly.
The stories are awesome. And while customers have loved, seeing the power of generative AI, even like I was using generative AI last night to write some new ads, for what we're going to do, to kind of bring Agentforce across. And it's so cool and so awesome. But to have it right inside the platform makes it very real for our customers who have to manage and share all of their information to keep it trusted, to keep it secure, to be able to provide capabilities in a regulatory environment. Look, they all want this huge breakthrough that's going to give them much more productivity, augmentation of their employees and scale like I've been talking about. But we're seeing that breakthrough occur because with our new Agentforce platform, we're going to make a quantum leap forward in AI. And that's why I want you all at Dreamforce, because I want you to have your hands on this technology to really understand this. This is not co-pilots. So many customers are so disappointed in what they bought from Microsoft with co-pilots because they're not getting the accuracy and the response that they want. Microsoft has disappointed so many customers with AI. Listen, these agents are autonomous. They're able to act with accuracy. They're able to come right out of the box. They're able to go right out of the platform.
Classic Marc Benioff. All right, what's it all mean? What's your big takeaway, the Drill Down Earnings Bite, the one number that tells us a whole lot about Salesforce? I'll have that for you right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So Salesforce second quarter earnings, what do you need to know? I'll tell you what you need to know. Decent quarter of $9.33 billion in revenues. But the big takeaway here is this is not the company that's growing at 30+% every single quarter on a year-over-year basis. The number that tells you a whole lot, the drill down earnings bite, is 7%. This company only grew at 7% on a year-over-year basis, at a very big company indeed, but not growing like it used to. And the market looks at it very differently as a result. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson. And you can check me out on Twitter at CoryTV and on Instagram and TikTok at Drill Down Pod. We give you those short earnings takes there where you can just get that takeaway, know what happened with lots of companies and move on. Check us out there and please follow me again on Twitter at CoryTV.